Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. David Bianco with us right now, CIO Americas, DWS. How'd your view change after last week?
Not much. A little bit of a surprise with the overreaction on the legendary yen carry trade and the way it really hit Japanese stocks. We do think there's a buying opportunity in Japan, and I think the yen carry trade's important, but American investors, particularly American technology investors, they really shouldn't be scared off by that phenomenon. I would tell you that while we were watching global markets and all kinds of other issues in the world, we were paying attention to earnings season. I'm going to say right up front that I have a different take on the second quarter earnings season than what many are saying. While it's true that the growth overall is strong, 10% year on year, and even excluding the Magnificent Seven Grade 8, it's up about 4%, and we haven't seen growth outside of the Magnificent Seven Grade 8 for a while. There's no rotation or change in earnings growth leadership, and I don't think we should have a change in performance leadership either. Actually, the earnings growth is still really mostly tech and communications, and still the same leading very big companies out of financials, certain ones out of healthcare. Really, it's been mixed elsewhere, and it's been still weak at consumer goods, and it's getting weaker at consumer services now. So I have to say, we have not seen a broadening of earnings strength at the S&P, not at the Russell 2000 either, still sluggish.
So as we think about performance in the stock market going forward, will it be the same old leaders, the big tech names and some of the other sectors? And is that still going to be what's going to lead this market higher?
Yeah, and it's hard to get a change in leadership without a little bit of volatility along the way. Regime changes don't tend to be entirely peaceful. But I think the market overall has a little bit more downside into the autumn, about 5%. I think this is still a good time to lighten up and prepare for some better opportunities in the autumn. But financials, healthcare, those are things we still like. We still like utilities too. That's doing very well. Defense stocks. But when it comes to auto, retailers, transportation, we don't see it yet.
Paul, I haven't asked this question in ages. Up 1.1%. Brent crude, $80.54. Yeah. Nobody's talking energy. All my radar's up.
Yeah, it's been quiet there. The energy sector was not an earnings growth contributor during the second quarter, but the energy sector is no longer that big of a sector, not even that big of an earnings contributor anymore. I think energy earnings will be flattish for the rest of the year and for possibly quite a long time. Nevertheless, it does represent value. It's cheap. It represents a geopolitical hedge that could be useful in the coming months and years. But it's not exactly the most promising high return industry.
So how about valuation here? I'm just looking, when we did trough that Monday morning last week, we were down, 8-9% on the S&P from its recent high. We've bounced back a little bit here. How do you think about valuation?
Still very demanding, even with the little bit of a retreat in 10-year yields and 10-year TIPS yields, which is welcome. It's very welcome to see 10-year yields drop during an equity sell-off rather than climb and be a cause of an equity sell-off. So we're getting that diversification across asset classes. But it also then leaves us with, well, is this decline in yields temporary on the idea that people are still nervous about things like yen carry trade unwind or geopolitical? It's hard to know, and I'm still doubtful that the 10-year yield is going to stay under 4% outside of a recession.
Okay, so I guess the question there is, what are we doing on the fixed income space here? Do we sit in my 2-year treasury at 4.06%, or do I take some credit risk here? Do some more?
Yeah, so up until recently, there were really good opportunities at the 2-year, 3-year duration point. I might even go shorter than that now to 1 year. I still think there are opportunities in muni markets.
Nice, that's what we're talking.
Yeah, I know it's not.
I love the muni market.
I like it too.
Preaching to the choir
but,
here.
And there, I think in the muni market you can take some credit risk and even some maturity, longer duration risk. And for those who believe that tax rates are going up, you'll value that part of the portfolio.
Do you have a confidence? Like, you're not a strategist, you're a guy that runs real money, but the answer is people have a confidence when they say the S&P, our year 12-month target's 5,600. Was that confidence shattered last week?
There's been plenty of things to be not confident about the past year and few years. And thank you. We do run real money at DWS, and I still think of myself as a macro-minded, intrinsic investor and spend a lot of time focused on the S&P 500 and its fundamental drivers like earnings and trying to give indications to our portfolio managers with sector industry preferences. But the point is, this is not a time to be confident about anything. There's a lot of uncertainty out there from the basics. Will we have a recession or not? Will there be a change in earnings leadership, performance leadership or not? And we do have an important election ahead, and it's still an uncertain world.
David Bianco, thank you so much.
Thank you.
Greatly appreciate it with DWS. Everybody's got to republish. It's August, and you're supposed to wait. Well, we're going to put out a big piece 6 days after Labor Day, and I'm like, okay, well, write it now.
No.
After what we heard last week, and are you taking you work for a German bank? Are you taking a month off?
A couple of weeks.
and those are Wall Street weeks, which
Exactly.
are, I got to call in on Monday, but we're fine.
That's right.
David Bianco, thank you.
Thank you.
Ellen Wald is definitive. Her book, Saudi, all I can say is read it, senior fellow at the Atlantic Council. Ellen, there's a decline in commodities across the board. Obviously, China's slowdown. How linked is your world of oil with the general commodity malaise?
So it's definitely linked, but it's definitely not one-to-one because as we've seen, oil is rising now. And I think that has a lot to do with concerns over tensions in the Middle East and also with the news that we've got a whole bunch of draws in terms of the stockpiles in the U.S. And so that's a signal that consumption is doing well, that demand is doing pretty well, although there are some hints that maybe it's not quite as good as we think. Mostly because refineries are not running at full speed. There really isn't an indication that they need to. And so we're just kind of drawing more on our stockpiles. And then you've got economic data. Recently, it seems that traders have taken the recent unemployment data as very heartening in terms of the economy. Though personally, I would caution against reading too much into any kind of unemployment data.
So what's really driving the show here today for global crude, Ellen? Is it demand concerns? Is it supply? What's really moving these markets here today?
That's a good question. I think it's both. I think it's really concerns in the Middle East right now because you've definitely got demand is always an issue. Although you'd think that if OPEC is trimming its demand forecast for the rest of the year, that would spell problems for oil. Although it could be that people think that because OPEC is trimming its demand forecast, that the OPEC countries will then decide not to increase production ever so slightly in October, which will then help keep oil prices up. So that's definitely a possibility. And I do think that that's really a big move to keep an eye out for is what is OPEC going to do? Because they are set to increase supply, not by all that much, but definitely increase supply starting in October. But if the economic signs aren't there that the market can handle an increase, then they will be facing a lot of pressure to roll that back.
So who has power now? OPEC, OPEC Plus, the United States with the huge oil success we've had, or the market?
I think it's definitely the market in this case. I think the market is really running the show here, and OPEC is just kind of tweaking here or there. And in terms of the United States, it's kind of ignoring the market in a sense. Oil production is high, oil production is strong, but that has a lot to do with exports. The fact that Europe is basically sanctioning all of Russian oil has definitely been a boon for the U.S. export market because they are available oil. We've got oil. We can export it. And in addition, there's no impediment really other than, anything happening in the Gulf of Mexico, potentially any kind of hurricanes, to getting that oil to Europe the same way there is in the Middle East when you've got to use the Suez Canal, or you've got to get through the Persian Gulf. Those are real hotspots right now. And we don't really see that in terms of U.S. exports.
So, Ellen, has Europe effectively weaned itself completely off of Russian energy? I mean, we're a couple of years into this war here. I know there was big concerns that first winter, but they seem to have kind of found other sources, I guess.
That is a really good question. And I think that this independence from Russian energy has not really been put to the test because we haven't seen a difficult winter. If the coming winter is somewhat more difficult, somewhat colder, then I think we'll really be putting that to the test. But really what's happened is American liquefied natural gas came to the rescue, and we were able to really increase our exports of liquefied natural gas to meet that demand from Europe. And now we even see Britain thinking about putting in an LNG import terminal just so it doesn't have to rely on the rest of Europe to get natural gas. Really, natural gas is a huge issue here, and I don't think that we have seen the last of this story.
So the 47 meetings I went to 47 years ago on LNG, and it never happened. Can you now say the LNG market is distributing and supplying and demanding what the promises were 30 and 40 years ago?
I do think so. And, it's funny because I remember back in, 2013 when I was speaking with some oil guys, and they were like, nah, we're never going to be exporting LNG. It's not going to happen. Well, it's happening.
Okay, Ellen Wald, thank you so much. Greatly appreciate it. Ellen Wald, the Atlantic Council there. I'm really excited about this conversation, because I can tell you on an HR basis, you talk about a career shift. This is truly, on Global Wall Street, the mother of all career shifts. She was unhappy with her corner office at the new tower of JP Morgan. So she said, forget that, I'm going with the Ute of America. Steph Guild, what was it like, your first meeting with Robinhood? Did you walk in like, with the basic JP Morgan blazer look, and they said, what?
At first, I was like, who are you talking about? Who had the mother of all career shifts? I actually was told in advance, don't wear a suit.
Really?
Make sure you put a T-shirt on. And so I had to, I thought about that, and I said, wow, it was that outfit recommendation was the reinforcing to me that this was quite a shift. And it took me a while. It took me a while to make the decision.
Tell us your observation. Frankly, seriously, folks, this could be a 3-hour conversation for Global Wall Street. What do you do in strategy at Robinhood that is different than doing strategy at the big 5 banks?
Yeah, I think, your clients are very different. I spent 11 years in the private bank at JP Morgan, and then 10 years in the asset management business prior to that, mostly in the U.S. equity part of it. And so you're working with people who either have spent their entire years getting advice from really good people, or they themselves have been managing money. So when I made the switch, my job to me is twofold. One is contributing to bringing really strong, innovative investment products to a customer base that hasn't always had access to everything.
Brilliant. Yeah.
And second is teaching our customer base about the markets, but in a way that isn't just explaining terms, like actually using the real terms and not using all these, you're in a garden. Like I would rather use a term so when they watch Bloomberg, they understand what the hosts are saying.
This is too valuable of a conversation for me to make jokes about you and the meme stocks, because Lisa's kids are trading Robinhood off the couch at home. How do you get well-meaning, well-intentioned people to pull out the time frame to long-term 30-day investment? That was a joke. How do you get them to pull out to a longer-term investment perspective?
I just think it's a matter of education, meeting them where they are. And they are on social media, they are on YouTube, they're on, I have kids too, they learn everything from YouTube. They know more than me about some things because of it. And I also think that you need to I think they've all learned a lot. Actually, when we look at like the way that they trade and the way that they invest, we've got the Robinhood Investor Index, and we get to kind of look at what they're doing regularly. Our average age customer has actually increased, and I think with time comes maturity.
The show
to
from what? 14 out to Lisa. How old's your daughter? 17.
She's 17, but
17?
my son's in his 20s, and he's doing that.
Yeah.
So he's going on, but he's looking to the social media, how you're talking about. So how do you find, like,
I mean, our average age is 33. Just
it is okay.
Yeah.
But what advice do you have for them? I mean, a lot of these young kids who are going on, what advice do you have for them who are going on social media and they're just believing whatever they hear?
Yeah. Just be curious, nonstop. Be like, why did they say that? What are they? What's in it for them? Like even when I read things from analysts or even from hedge fund managers, I think, what's in their book, like what's helping them. Just always be curious and wondering, like, why is someone saying that, and what would the other side of that say? I just think that's like, I think, who is it, Peter Lynch, that said, if you got through 5th grade math, like you can analyze a company. You can do it. You just have to spend the time doing it, and that's why I try to explain things in the context of the market. Like I have a weekly blog, and I do this.
You have a weekly blog. Yes. That's really good. Steph Guild, what did you learn, and what would you like to message to the Robinhood audience off of VIX at 65, closing the week at 21?
Well, maybe you should go to sleep on Sunday and wake up on Friday. But besides that, I think actually, like, when VIX gets to those levels, it's usually historically an opportunity. I mean, I'm not saying you should always jump in, because sometimes it is a part of a greater problem. But if you take a step back and looked at what was happening in the world, I just think the markets were throwing a temper tantrum, just like they did in like December of 2018 when the Fed wanted to keep raising rates, and the market said, no, you should not. And the Fed listened. And I mean, you said you have kids. When you didn't give them what they wanted, what did they do? They threw a temper tantrum. And, also the Fed, I think in 2018, taught the markets that, like, well, we listened to you. And so I think they were trying to do that this time. Like, you need to cut, and you didn't commit enough to us.
Tell me about, in particularly with Robinhood's age 33 demo, whatever that demo is, and that's open to debate. But tell me how you, as an adult, blog, advise on meme stocks. Because we're sitting here as a comedy act making jokes about it. Except there's some people making money, and there's a lot of people getting crushed by the volatility in meme stocks. How do you deal with it? You have
to know. I mean, a couple of things. One is that, like, I think the meme stock stuff, we're the vehicle. We don't come out and say, like, go out and do this, right? Like, but secondly, I think it's kind of interesting that you are watching a generation of people express their views, and they fundamentally are changing the makeup of a company. Right? Like if you think about some of these companies, like they have been able to raise capital and they've been able to take down debt, and they could end up being like completely turned around companies because of it, because of their shareholder base believing in them and whatever that means for them. But you have to, stay diversified. I always say, like, everyone's money is kind of like a pyramid. You need to have a emergency cash, just so you lose your job, whatever happens, like you've got that for at least 6 months. Then the next layer, make sure you have some diversification. And our customer base, like we were seeing it this past, week of volatility, they weren't just buying the names that are in our Robinhood Investor Index. They were also buying broad-based index funds.
This is really
using
cool.
as a way to add to it. And then after that, yes, like invest in your aspirational things, because I think if you always just ever stay fully diversified, you're never going to see you have to take risk to get return. That always comes with it.
That's the smartest thing I've heard on this show. It's Monday for the week. That'll be,
that's a good start.
This has been great. Steph Guild, thank you so much with Robinhood. Running strategy for them in a blog. What's the name? Do you have some fancy
Investors Guild, just like my last name.
Oh, I get it. Great. It's medieval, positively medieval. And very good.
It's
Steph
the branding,
Guild
the branding.
with investor skills, branding. Which social is the biggest reach for Robinhood?
Well, we have just Robinhood app on social, and then I have Steph Guild NYC myself.
Okay. Like, are you working TikTok every day?
I don't go. I'm on Instagram and X,
There we
not
go.
TikTok.
Okay. I haven't made. Could you,
I heard you talking about it.
Sorry,
I'm just
you're
learning
saying
how
it.
to do these reels.
Yeah, I'm sitting over here. I've been, Paul saved me today. I'm over here trying to figure out how to put out Instagram. Don't be a stranger. Steph Guild, thank you so much with Robinhood. Your daily look at the front pages, the Lisa Mateo Hour. It's brought to you by IBKR with the Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. An incredibly busy weekend. Lisa, I saw her slaving away. She had like an hour's worth of stuff. Go.
Thank you. Artificial intelligence, everybody's talking about it, right? So it wants to count your calories. So let me explain, okay? Researchers developing this technology, it's going to analyze what you eat bite by bite. So basically what you do, this is from the Wall Street Journal, you record yourself eating whatever, as I'm eating, a spoonful of chobani. It's recording the portion sizes of the spoon as it goes into my mouth. But the only thing that it's, I know, don't huff and puff just yet, okay? But what it's not recording, it's not up to date with is what kind of food you're eating. So that they say is going to, come in the next few months or so. But
Is this like an AI thing?
It's an AI thing. So it tracks the spoon, how much is in the spoon as you put
But
it
you've already
into
got one of
your
those crazy watches on your wrist. Doesn't that count everything now?
No, it doesn't count calories.
Oh, okay.
It doesn't.
All right.
There's
Okay.
a lot of apps and stuff, but
How's AI going to solve this? I'm sitting there with a Manhattan up. We're out of cherry, so I'm just sitting there on the deck with a Manhattan up watching the sunset over Sweeney's house.
Okay.
I could see him in the distance on his Vespa. Vet Bill's on my lap, and Kennel Fee is right next to Vet Bill, and I got a box of Whole Foods crackers,
Okay.
which they love.
yes.
I have one, then Vet Bill has one, then Kennel Fee has one. AI's going to keep track of that?
It'll keep track of yours if it's on a spoon. That's the only thing. They're working
Please.
on the technology, okay?
Yeah, so are we. Next.
It could go somewhere. Okay. Disney, they held the D23 convention over in California over the weekend. So they revealed all those details. Remember, they said they were going to spend so much money on their parks. So they broke it down for you. So stay with me, moms and dads, take notes, okay? So Walt Disney World's Magic Kingdom in Florida, they're going to get a new land devoted to villains. Frontierland is getting an upgrade that includes a Cars-themed area. Then you have the Hollywood Studios in Florida. They're getting land based on Pixar's Monsters franchise. Then over in Animal Kingdom, they have a new Indiana Jones ride, and they're recreating the house from that film Encanto. And then globally, you have Spider-Man attractions coming to Disney parks in Shanghai, Hong Kong, Paris. The company is building a log flume ride based on The Lion King. And here's the topper. They're planning 4 new cruise ships.
Now we're talking.
So it's not just, the parks, but the cruise ships,
Each one of
too.
those babies costs $1 billion.
Are you kidding?
Yeah.
Oh, my gosh.
They're awesome, though. I'm not a cruise person, but I went out on a investor cruise they had for us a bunch of years ago. Pretty nice.
We go to surveillance. Oh, he's not there. He's on his break. He's got a union break. It's a union job.
Yeah.
Cy Benson is our cruise guy. And Cy, I wanted to ask him which is the geography, like which cruise does he like best, but he's on it's a union break.
It's a union break.
Lots of money.
But those Disney cruises, I did take a tour. You're right,
Yeah.
and it's amazing
Yeah.
the ships and how much stuff they have on it. But
Yep,
they
big
broke it
stuff.
down. They said how much, and this is even. They've been talking about how the parks business is starting to slow. So
It's just a little
we'll see.
cyclical
A
thing.
Next.
little cyclical thing. Okay, corporations. That whole in and out flying on one day, it's starting to change. Like a lot of corporations are cutting back on that. So this is the head of Global Business Travel Association tells the Financial Times, the way companies traveling are different. So they're declining on those one-day flight trips, frustration with flights because they're just getting tired of being delayed and just for in and out in one day. Environmental concerns, so they're packing more meetings into fewer trips. So companies
My
are
longest
starting to
one-day
change.
trip that I did
Is
on a
what?
fairly regular basis was Denver, New York to Denver. I would do
And
that
back
on a
one
one day.
day.
Yeah, you could get in there, get 2 or 3 meetings, and get back at not a crazy time. That's the max.
Yeah,
So,
no,
but yeah.
I couldn't.
Only for Janice would I do that.
Yeah.
There's a big
Do you
account out there.
is Zoom a replacement? Is the heart of the matter?
question,
I don't think
yeah.
it is.
Yeah, no, that's
I'm in
true.
the camp. It's on. Jamie Dimon's heated about this.
Yeah.
He's at J.P. Morgan, I believe. he's get on the plane.
Yeah, get on the
I
plane,
mean,
go
there's
see
no
your
mincing
clients.
words. Go see your clients, have lunch, talk about, which I'm fully on board with that. And you know where I am, Lisa, on Zoom.
Yes. Yes, I do.
You got one more for us?
I do.
Yeah.
Okay. I'm not sure if you have one of these, Tom. Do you have a pet trust or a pet directive?
I actually worked on this weekend.
You did?
Yes. I got 150 pages from Keith, When Are You Gonna Die? Great law firm. And Keith, when are you, when are you gonna die?
.com.
And back, like there's 6 pages in the way back on the dog trust. Wow. And it's there.
So you
Get
did
it
money towards
notarized.
their care?
Yeah, so it's not, so the pet trusts were like, when people leave millions
Right.
of dollars to their, to Fido.
Right.
But now it's the directives, which is basically saying who's going to care for your pet, and then they'll leave money for
Right.
that
For that
care.
Okay.
We call it a side letter. And
side letter.
I said to Keith, I said, do you understand what dog walking costs in Manhattan? And he had never seen those numbers. And,
It's crazy.
it's crazy.
Well, that's
So-
what they're saying, because you're spending money on that. The food is ridiculous.
No
the
way.
health care,
Right.
the dentist, isn't that another one for the teeth?
Yeah, the dentist isn't. We're just featuring the dentist on our new Instagram account. But the Horace Mann School of Veterinary Medicine. I just make the checkout tuition payments to Horace Mann. But Paul, this is serious stuff, and the answer is I have to write into the trust Chewy.
Yeah.
I mean,
absolutely.
right
Should
into
we-
the trust.
Absolutely.
He demanded.
Yeah. Direct
where
payment.
do we get
Direct
the food?
payment.
So this is like a new thing.
So
like
it's
growing.
becoming more prevalent for people who are not rich, just everyday people who just have pets, and they want to make sure they take care of who's taking care of their pets.
Lisa, Mateo, our newspapers this morning. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.